Hey there traders, welcome back to the StockBandit.tv for episode 11. I'm sure glad that you joined me and hope that your trading week is going well. So in this episode, what we're going to do is we're going to take a look at what do you do when you find a setup that you like and you know where you want to get in the trade, you know where you want to get out of the trade if you're wrong and if you're right. The best way to handle that, in my opinion, is to set up what's called a bracket order, and that's where, again, you know where you want to enter a trade, you know where you want to stop out in case it fails, and you know where you want to book profits at a higher level. And so you kind of know your three levels, and the best thing to do generally is to set up an order that's going to just manage that trade for you. You determine your risk ahead of time, and then you just let it go and leave it alone, and you're not living and dying by every single tick. These are great orders for swing trades. But they also are very good for day trading, and so even if on an intraday time frame you know where you're going to get in and out of positions before you put the trade on, set one of these orders and you can leave it alone and you don't have to worry about it. So let's take a look at an example here. This is SPY, and so spiders, you know, S&P 500 tracking ETF, and so like the S&P 500, this ETF has spent the majority of the past 11 weeks or so in this big trading range. We kind of broke out above and failed. We kind of tested the downside just recently, and now we're trying to hook back higher. And so as this downside move has kind of created this little bit of a rounded bottom, and we're now starting to run higher here, and we've broken out of this congestion area that we've spent the past 8 or 9 sessions in. Now let's just say, for the sake of this example, that you think that the spiders are going to continue climbing and come back up here and test the upper end of this range, which is closer to $92. So even further, let's say you want to stop into your trade above today's high. So if we exceed today's high, you want to get long. If we break today's low, you want to stop out because you don't want to see this gap get filled that was produced this morning. And you want to book profits a little bit short of this resistance level. And so you kind of know your three levels for this example. So what I'm going to do now is show you how to set up this kind of an order. So pulled up spiders here. I'm going to go here and I'm going to go to buy custom with OCO bracket. What that's going to do is populate 3 different orders down here for me, and it lets me specify my levels and order types for each of these 3 orders. So let me kind of explain to you what we're looking at. The first order is my buy order. Then I have 2 sell orders. So let's say I want to buy at 88 bucks, and so let me just set this up here. So there's 88 bucks. So I want to book profits. Let me change this to a stop. So I want to stop in at 88. Buy stop at 88. So I'm only going to get long if spiders trade at or above 88. Then I want to book profits at the, we'll call it 91.50 level, because I don't want to press my trade all the way to the upper end of that trading range. I want to be taking profits just before it's reached. And then I want to stop out, again, we're going to just call that the 86 level. And so now I've got my buy stop for 88. I've got a limit sell order that's going to book profits up above. If spiders run to 91.50, it's going to book my profits there. I'm going to make 3.5 points. And then if we roll back over and start to fill today's gap and we crack the 86 level, I'm going to stop out, and of course I'll have my losing trade, but then I'm limiting my downside and reducing any further damage. And so what happens is, you know, I've got this single buy order right here, and then what happens is these next 2 orders really are going to offset each other, and whichever one hits first is automatically going to cancel the other one. So I essentially have 1 buy order and 2 sell orders out there, but only one of these is going to be allowed to execute. And that's a really big thing, because it allows you to, you know, put a bracket around your trade to where you're protecting both sides. You're not going to allow yourself to get too greedy. You know that this is a logical area to book profits, and you know this is a logical area to stop out. So check with your broker and see if they offer this order type. If you have a bracket order available to you, then I would definitely suggest putting those to use because they're excellent to have on hand. You can set them up very quickly, and then it's just a matter of moving on to the next trade or looking for new opportunities to start putting your money toward, other than sitting around and reacting to every single little tick in this one position. So there's episode 11 and a good solid look at bracket orders. I hope that you found it helpful. I'll be back soon with more videos, but until then, trade like a bandit.